also cut its base rate by nearly 20 basis points, close to that 9.95% mark. So Jeevandas Narayan, the managing director of State Bank of Travancore, joins us to detail that base rate cut. Thanks a lot for joining us, Mr. Narayan. First up, could you give us a sense of how many or what percentage of RBI's 120 basis points rate cut since April have you taken in State Bank of Travancore?
Good afternoon. In fact, we have done it in two lots. And as you know, we were one of the first to be off the block in March with a 10 basis point cut. And with this, now the total pass on would be in the range of 30 basis points. Okay. We were at 10.25 before that. From there, we came down to 10.15 in March. And after that, the next phase we have now taken yesterday to be effective from Monday.
Okay.
Yeah.
So, what is your cost of funds right now, Mr. Narayan? And do you think that there could be a further reduction in your base rates in the coming months?
See, as my good friend Shyam mentioned earlier, it's more a question of timing rather than capability at this point.
Yes.
And cost of funds, talking about cost of funds, you know, we are in the range of around 6.5 now.
Okay. And do you expect further softening?
It should be there, you know, because there's a lot of liquidity overhang, but then the factor to be looked at is how the credit growth happens going forward. Because, you know, a lot of people are bullish now with these cuts across the board which are expected to happen, that the offtake especially, you know, would be triggered in home loans and automobile loans and would spread to other segments as well. So let's watch this going forward because there's ample liquidity, and now with this sort of a cut, I think, you know, there should be some action on the ground.
Well, Mr. Narayan, in that case, what is the kind of credit offtake you're looking at? Because even after a 30 basis points cut, your base rate stands at 9.95, which is in the higher end, which is at the higher end as compared to the other banks as well. So, at these rates, would you still expect a credit offtake improvement? And if yes, could you quantify that for us?
Yeah, I think so. Because, you know, actually, even if you talk about base rate at around 975 or 995, ultimately, you know, it's a couple of very, you know, large corporates with the best of ratings that can really be given these base rates if you talk about corporate credit. And of course, as you know, nothing much has been happening in corporate credit. But then the whole action is on the SME and in the agri as also in the P segment. P segment, no doubt, yes, in housing loans, you know, most of the banks are as close, if not at the base rate itself. But then SME and all that, I don't think, you know, these are, any of the bank does it at base rates. So once the retail growth happens, and that spreads to the SME segment as well, which has started happening, I think, you know, the margins, NIMs, of course, there will be pressure on NIMs. That's what is being said, because, you know, there is always a lag effect also, because all your, you know, interest-bearing assets get repriced now with the cut in base rate, but, you know, deposit for the effect to be, you know, spreading to deposits, it will take some time when the repricing happens. But nevertheless, the point is that, yes, there is scope, there will definitely be pickup, and there may not be an immediate impact in terms of, you know, bank will having to sort of give up on NIMs. Because ultimately, I believe that there could be deposit cuts also, which could be slowly coming in.
Okay.
Yeah.
Sir, your net interest margins were 2.67% as of the previous quarter. With this additional 20 basis points rate cut that you've seen or that you've given, how much pressure do you envisage on net interest margins?
See, for this September quarter, of course, this effect would be kicking in. So I think there should be a further improvement of around, you know, at least 20-25 basis points happening. At least 20, I think we should be happening. But going forward, you know, again, it's a function of, you know, the yields versus the volumes. So in case the volumes start coming in, there will not be a net effect despite the fact that the yields have gone down. So I think, you know, more or less it will get neutralized, and there will be a slight downward bias on the NIMs. But there may not be a drastic reduction in NIMs.
Okay. What is your sense in terms of provisions and hence asset quality going forward, Mr. Narayan? Because provisions last quarter were at around 300 crores. Eventually, do you think asset quality concerns will prevent you from cutting further base rates?
The asset quality concerns, I really cannot say that, you know, everything has, you know, sort of come out of the woods, so to say. But with the credit pickup, I think these, you know, concerns also will get a bit of, will get tempered, so to say, to some extent, because ultimately when the book is growing, you get also sufficient resources, as also sufficient strength to take on a bit of, the slackness in the quality of the portfolio. So I believe that while we are not totally out of the woods, going forward with the expected boost in credit pickup, it will get tempered to that extent.
All right. Thanks a lot, Mr. Narayan, for joining us and detailing the extent of your base rate cut. That was Mr. Narayan of State Bank of Travancore, indicating that he's cumulatively cut 30 basis points since RBI's cut of about 125 basis points. And going forward, they're looking at more base rate cuts, some pressure on the NIMs as well. But we'll settle into a short break. Coming up on the other side, some technical perspective and trading ideas only on MCN.